Hello all, welcome to your schemes. I'm Ilakya. I hope you're all doing well. Today we are going to see top 10 sectoral mutual funds to invest this year. Before we start, let's understand a little bit about sectoral funds. It's a type of mutual fund that invests in securities of specific sector of the economy, such as banking, telecom, pharmaceuticals, information technology and infrastructure. For example, a banking sector funds can invest in best performing banks, and a pharmaceutical fund can only invest in stocks of pharma companies. The aim is to invest in those sectors which have a high growth potential in the near future. These funds can really end up making a huge profit if the timing of the investment is accurate. Who should invest in this scheme? As I've mentioned, this mutual fund can double your money or trouble your money. Investors with a high risk appetite can invest in sectoral funds. You should invest in these funds only if you are confident about that particular sector and only if you believe that the sector is likely to perform well in the near future. It has growth potential. Then you can go ahead and invest in this sector mutual fund. The important thing is that you must know when to exit these type of funds. This video is for information purpose only. Mutual funds are subject to market risk. The return shown in this list doesn't guarantee future returns. Please consult your financial advisor before investing. First on the list is DSP BlackRock Natural Resources and New Energy Fund. This aims to generate capital appreciation and provide long-term growth opportunities. It invests in equity and equity-related securities of companies that is domiciled in India. And the predominant economic activity in this should be discovery, development, production or distribution of natural resources via energy and mining or alternative energy and energy technology sectors with emphasis given to renewable energy, automotive and on-site power generation, energy storage and enabling energy technologies. It also invests a portion of its corpus in equity and equity related securities of companies that is domiciled overseas. Other unit shares of Merrill Lynch International Investment Fund's New Energy Fund, Merrill Lynch International Investment Fund's World Energy Fund, and similar other overseas mutual fund schemes. Let's see some key information of DSP BlackRock Natural Resources and New Energy Fund. The NAV of this scheme is rupees 61.859. The expense ratio is 2.14, Sharpe ratio 1.14, information ratio 0, alpha ratio 0, minimum investment amount is 1000, minimum SIP investment is 500. Now let's see the exit load. For 0 to 12 months 1%, 12 months and above there is no exit load. Now let's see the returns. 1 year return of this fund is 17.4%, 3 year return is 26.3%, 5 year return is 12.9%, return since inception is 12.6%. Now let's see 5 year historical performance. In 2018, the return was minus 15.3%. In 2019, 4.4%. 2020, 11.5%, 2021 42.8% and 2022 9.8%. If you invest 5000 rupees monthly SIP for 5 years, total investment amount would be 3 lakh rupees and expected amount after 5 years is 4,15,684 rupees. This is with the expected annual returns of 13%. The net profit would be 1,15,684 rupees. Some of the top securities holdings under this scheme is Hindalco Industries Limited, Jindal Steel and Power Limited, BGF Sustainable Energy, BGF World Energy, Tata Steel Limited, Reliance Industries, NMDC Limited, Oil and Natural Gas Limited, Bharat Petroleum Corporation, GAIL Limited. Now let's move on to IDFC Infrastructure Fund. The investment objective of this scheme is to seek to generate long-term capital growth through an active diversified portfolio. It invests predominantly in equity and equity related instruments of companies that are participating in and benefiting from growth in Indian infrastructure and infrastructural related activities. Let's see some key information for IDFC Infrastructure Fund. The NAV of this scheme is rupees 31.385. The risk is high, expense ratio 2.44, Sharpe ratio 2.14, information ratio 0, alpha ratio 0. Minimum investment in this scheme is 5,000, minimum SIP investment 100. Let's see the exit load. For below 1 year, 1% is the exit load, and above 1 year, there is no charge for exit load. Let's now see the returns. 1 year return is 32.6%, 3 year return is 35.3%, 5 year return is 13.8%, and return since inception is 9.6%. Let's now see past 5-year historical performance. In the year 2018, the return was minus 25.9%, 2019 minus 5.3%, 2020 6.3%, 2021 64.8%, 2022 1.7%. As I've previously mentioned, the investment time is very important for you to get good returns. From sectoral funds, you may not expect steady returns. If you invest 5,000 rupees monthly and for a tenure of 5 years, let's say the expected annual returns is 14%, your total investment would be 3 lakh and the expected amount after 5 years is 4 lakh 26,080 rupees. Net profit that you are going to make would be 1 lakh 26,080 rupees. Some of the top security holdings are Larsen and Toubro Limited, Ultratech Cement Limited, Kirloskar Brothers Limited, ABB India, Bharat Electronics, Bharti Airtel, JK Cement, Thermax, Ahluwalia Contracts, Torrent Power. Next on the list is Aditya Birla Sun Life Banking and Financial Services Fund. The investment objective of this scheme is to generate long-term capital appreciation. They invest predominantly in equity and equity-related securities of companies that are engaged in banking and financial services. The scheme does not guarantee any returns. Let's see some key features of Aditya Birla Sun Life Banking and Financial Services Fund. NAV of this scheme is 46.47 rupees and the risk is high. Expense is 2.13, Sharpe ratio 1.35, information ratio 0.65, alpha ratio 7.74. The minimum investment under this scheme is 1,000 rupees. Minimum SIP investment is also 1,000. Exit load for below 1 year is 1% and above 1 year there is no charge. Let's now see the returns. 1 year return of the scheme is 21.4%, 3 year return is 26.6%, 5 year return is 8.4%, and return since launch is 17.2%. Now let's see past 5-year historical performance. In 2018, the return was minus 2.4%, 2019 14.9%, 2020 1.1%, 2021 16.8%, and in 2022 11.5%. If you invest in this scheme for a monthly SIP of 5,000 rupees, investment tenure be 5 years with an expected annual returns of 9%, your total investment would be 3 lakh. Expected amount after 5 years is 3,76,357 rupees. The net profit that you are going to make would be 76,357 rupees. Some of the top security holdings is HDFC Bank, ICICI Bank, Axis Bank, Bajaj Finance, Poonawalla Fincorp, State Bank of India, Repco Home Finance, Federal Bank, Bandhan Bank. Next on the list is Franklin Build India Fund. The scheme seeks to achieve capital appreciation by investing in companies engaged directly or indirectly in infrastructure related activities. Let's see some key information. The NAV of the scheme is 86.922 rupees. The risk is high, expense ratio 2.29, Sharpe ratio 1.98, information ratio 0, alpha ratio 0. Minimum investment in the scheme is 5,000 and minimum SIP investment is 500 rupees. Exit lower for 0 to 1 years 1%, 1 years and above nil. Let's now see the returns. 1 year return of this fund is 31.8%, 3 year return is 34.9%, 5 year return is 16.1% and return since launch is 16.8%. Let's now see 5 year historical performance. In 2018 the return was 10.7%, minus 10.7%, and 2019 6%, 2020 5.4%, 2021 45.9%, 2022 11.2%. If you invest 5,000 rupees in monthly SIP, investment tenure be 5 years, the expected annual returns is 17%. So the total investment amount is 3 lakh, expected amount after 5 years is 4,58,689 rupees. The net profit you are going to make is 1,58,689 rupees. Some of the top security holdings are Larsen and Toubro Limited, NTPC Limited, ICICI Bank, Power Grid Corporation of India, KEI Industries, Bharti Airtel, Oil and Natural Gas Corporation, REC Limited, Kirloskar Oil Engines, Iron Exchange Limited. Next on the list is Sundaram Rural and Consumption Fund. The aim is to generate long-term returns by investing in equity and equity-related instruments of companies that are focusing on rural India. Let's see some key information. The NAV of the scheme is 72.2012 rupees. Risk is moderately high, expense ratio 2.27, Sharpe ratio 0.84, information ratio 0.16, alpha ratio 3.88. The minimum investment in this scheme is 5,000 rupees and minimum SIP investment is rupees 100. The exit load for 0 to 1 year is 1% and 1 year and above there is no charge. Let's now see the returns. The 1 year return of this fund is 17.8%, 3 year return 20.4%, 5 year return would be 10.5% and return since launch is 12.1%. Let's see 5 year historical performance. In 2018 minus 7.8%, 2019 2.7%, 2020 13.5%, 2021 19.3%, 2022 the return is 9.3%. If you invest rupees 5,000 in monthly SIP for an investment tenure of 5 years with an expected annual returns of 11%, your total investment would be 3 lakh and expected amount after 5 years would be 3,95,578 rupees. Net profit that you are going to make would be 95,578 rupees. What are the top holdings in this scheme? Hindustan Unilever Limited, ITC Limited, Kalyan Jewellery Limited, Titan Company Limited, Bharti Airtel, Mahindra and Mahindra Limited, Maruti Suzuki India, United Spirits Limited, Safari Industries, Nestle India Limited. Next on the list is Kotak Infrastructure and Economic Reform Fund. The objective of this scheme is to generate long-term capital appreciation, predominantly investing in equity and equity-related securities of companies that is involved in economic development of India. Let's see some key information. NAV of the scheme 44.98 rupees. The risk is high, expense ratio 2.12, Sharpe ratio 2.43, information ratio 1.65, alpha ratio 13.82. The minimum investment under this scheme is 5,000 rupees. Minimum SIP investment is 1,000 rupees. Exit load for 0 to 1 year 1%, 1 years and above there is no charge. Let's now see the returns from this scheme. 1 year return is 28.1%, 3 year return is 35.2%, 5 year return is 17.1% and return since launch 10.2%. Let's see 5 year historical performance. In 2018 the return is minus 19.6%. In 2019, 3.6%, 2020, 3.4%, 2021, 57.3%, 2022, 15.6%. If you invest 5,000 in monthly SIP for a tenure of 5 years with an expected annual returns of 18%, your total investment would be 3 lakh. Expected amount after 5 years is 4 lakh 70,047 rupees. The net profit would be 1 lakh 70,047 rupees. Top holdings is Larsen and Toubro, Ultratech Cement, Bharti Airtel, Reliance Industries, AIA Engineering Container Corporation of India Limited, Indraprastha Gas, Shree Cement, Kalpataru Project International Limited, Mahindra Lifespace Developers. Next on the list is SBI Magnum Comma Fund. The aim is to generate opportunities for growth along with possibility of consistent returns. It invests in stocks of companies engaged in commodity business within the following sectors, that is oil, gas, metals, materials and agriculture, and in debt and money market instruments. Let's see some key information. NAV of the scheme 73.55 rupees. Risk high, expense ratio 2.6, Sharpie ratio 0.45, information ratio minus 0.89, alpha ratio minus 0.8. Minimum investment in this scheme is 5,000. Minimum SIP investment is 500. Exit load for 0 to 1 years 1%, 1 years and above nil. Let's now see the returns. 1 year return of the scheme is 11.6%, 3 year return 20.4%, 5-year return is 14.6%, and return since launch is 11.7%. Let's now see 5-year historical performance on absolute basis. 2018 minus 18.7%, 2019 11.8%, 2020 23.9%, 2021 52%, in 2022 minus 6.6%. If you invest rupees 5,000 in monthly SIP for a tenure of 5 years with an expected annual returns of 15%, total investment would be 3 lakh. Expected amount after 5 years is 4 lakh 36,710 rupees. Net profit is 1 lakh 36,710 rupees. Top holdings from this scheme is Tata Steel Limited, KPR Mill Limited, NTPC Limited, Ultratech Cement, Reliance Industries, CCL Products, Neogen Chemicals, Jindal Stainless, Hindustan Copper, Coal India Limited. Next on the list is SBI Consumption Opportunities Fund. The aim is to provide investors maximum growth opportunities by investing in stocks of growth oriented sector of the economy. Key information: NAV of this scheme is 237.29 rupees. Risk high, expense ratio 2.31, Sharpie ratio 1.64, information ratio 1.42, alpha ratio 11.68. The minimum investment under the scheme is 5,000. Minimum SIP investment is 500. Exit load for 0 to 15 days 0.5%. 15 days and above there is no charge. Let's now see the returns from this fund. 1 year return is 19.2%, 3 year return 30.7%, 5 year return is 14%, and return since launch is 15.7%. Now let's see 5 year historical performance on absolute basis. 2018 minus 2%, 2019 0.1%, 2020 13.9%, 2021 35.6%, 2022 13.9%. The returns looks good in this scheme. Now let's see how much you will get if you invest 5,000 in monthly SIP. This is for a tenure of 5 years. Expected return of 14%. Your total investment would be 3 lakh. Expected amount after 5 years is 4 lakh 26,080 rupees with a net profit of 1 lakh 26,080 rupees. Top holdings in the portfolio are Hindustan Unilever Limited, ITC Limited, Chalet Hotels, Mrs. Bector's Food Specialty Limited, Protector Gamble Hygiene and Healthcare Limited, United Spirits Limited, Go Fashion, PVR, INX, Bajaj Auto, Hero Motocorp. Next on the list is Mire Asset Great Consumer Fund. The objective is to generate long-term capital appreciation by investing in companies that are likely to benefit either directly or indirectly from consumption-led demand in the India. The scheme does not guarantee or assure any returns. Let's see some key information. NAV of the scheme 68.73 rupees. Risk is high. Expense ratio 1.85, Sharpie ratio 1.27, information ratio 1.07, alpha ratio 8.68, minimum investment is 5,000 and minimum SIP investment is 1,000. Exit load 0 to 1 years, exit load is 1% and above 1 years there is no charge. Let's now see the returns from this fund. 1 year return is 19.5%, 3 year return is 24.1%, 5 year return 14.2% and return since launch 16.8%. And now see 5-year historical performance on absolute basis. In 2018 1.9%, 2019 8.6%, 2020 11.2%, 2021 33%, 2022 7.2%. Top holdings in the portfolio are ITC Limited, Hindustan Unilever, Bharti Airtel, Titan Company, Maruti Suzuki India, HDFC Bank, United Spirits, Seat Limited, Nestle India Limited, Axis Bank Limited. Next on the list is Nippon India Power and Infra Fund. The investment objective of this scheme is to generate long-term capital appreciation by investing in equities and equity-related securities of companies in power sector. The NAV of this scheme is 219.38 rupees. Risk is high. Expense ratio 2.23. Sharpie ratio 2.52, information ratio 1.55, alpha ratio 17.26. The minimum investment under the scheme is 5,000 rupees and minimum SIP investment is 100. Exit load is 0 to 1 years 1% and 1 years and above there is no charge. Let's now see the returns. 1 year return is 37.9%. 3-year return 32.2%, 5-year return 16.6%. Return since launch is 17.4%. 5-year historical performance on absolute basis. 2018 the return is minus 21.1%, in 2019 minus 2.9%, 2020 10.8%, 2021 48.9% and in 2022 the return is 10.9%. If you invest 5,000 in monthly SIP for a tenure of 5 years with an expected annual returns of 17%, your total investment would be 3 lakh. Expected amount after 5 years is 4 lakh 58,689. The net profit that you are going to make is 1 lakh 58,689 rupees. Top holdings in the portfolio: Larsen and Toubro, NTPC, Reliance Industries, Bosch, Ultratech Cement, Bharti Airtel, Kynes Technology, Sterling and Wilson Renewable Energy, Rights Limited, Container Corporation of India. If you are planning to invest in sector funds, please keep in mind that it has concentrated risk. If you don't keep up with business cycles, you may incur huge loss. On the other hand, if you are well versed with the sector fundamentals and you have the capability to assess the volatility, then you can make a good profit. Always be careful when investing in sector funds and invest only a limited portion of your capital. If you feel this information was helpful, then please hit the like button. It means a lot. And for more similar videos, please subscribe to Your Schemes. Thank you. Have a good day. Bye bye.